Welcome back to the Broker Power Up podcast, the AIME podcast for strategy, stories, and insights to help you close more loans. I'm Tom Golightly, joined by Jonathon and Haddad. How are you?
Good, man. Welcome back, my friend.
Thank you. It's been a second getting my feet back under me in a different time zone. Did a lot of hiking in Scotland. It was a ton of fun. I'm sure I'll be posting pictures and sharing. And I don't know, it was just really nice and super thankful to my team and everyone for letting me disconnect because I definitely needed it. And now I'm feeling energized and ready to get back going. And we have a lot going on today. We have the Broker Buzz, where we're going to dive into this week's top posts of the week from the Brokers Are Best Facebook group and discuss what's trending, what's working, and what you need to know. Then we're going to have a combined sales pitch training and story time with John. And then that's where John's going to help us become better salespeople and learn a story along the way. But first, fortune cookie. You got it, or you want me to open one?
You go for it.
All right. And this week's fortune, it is super cool seeing all the fortune cookies from Fuse.
Hey, so that's actually one of my favorite things right now because they pop up randomly, on my feed, and I'll sit there and it's a different person.
Yeah.
But it's the ones that it's crazy, because you're watching their mind start to think. And the reason I love it is it's not, and I don't mean this in a negative way, but we go through the motion so often where it's like, how are you doing? Good. Where this is like, what does that mean to you? And now you're watching them have to think through that process. It's my favorite thing right now to watch.
My favorite part was learn Chinese. The other side. Love knows no boundaries, but it speaks in unique dialects.
So
love knows no boundaries,
but it speaks in unique dialects. This has to do, I think, with love language, at least for me, when it comes to the interpretation of like the love language. And there's ways that you can show, right, the way you appreciate somebody, even if there is a disconnect in communication, right? Like, we know if you were to meet somebody across the world that doesn't speak the same language of you, they would understand a kind act. They would understand an act of love just based off what you're doing. Like, if they watched you help the homeless, for example, or they watched you at a VA shelter, at a homeless shelter, whatever the case is, it really doesn't have a dialect. However, there are so many different ways to love, and there are so many different ways to be loved. I think one of the hard things growing up in a foreign household like I did, and I won't just say foreign, I'm sure many other people that didn't experience the same thing. But for me, growing up in a foreign household, it's like learning how you need to be loved, right? Growing up, emotions weren't a big focus in my family growing up, right? And not a bad thing. They just came from a different part of life where my dad, was trying to figure out how to have hot water growing up. My mom was dirt poor growing up. So their priorities were different. When they have kids, they're working on that next step. When now my kids, I can work on that next step. But that is such a powerful statement because there are so many different ways of loving somebody and then also learning to love yourself.
Oh, absolutely. And I think you crushed it. I mean, you took the words out of my mouth on a couple of things. I couldn't agree more on that. The unique dialects definitely stuck out to me in the way that it's so many different forms as well. It's not even just to take it a little different direction. Like you have a love of a spouse, you have the love of a friend, you have the love of parents, you have the love of a sibling. Like, there are all these different dialects, if you will. And I think it all comes down to love, but it's all just how you interact with those people is still very different, but it all still comes across as love. That got deep. I like that a lot.
No, I did too. I actually my brain started going through. I'm like, we can do a whole podcast on that.
Yeah, absolutely.
Loving your clients, loving what you do, loving your spouse, loving yourself. I mean, there's so many different ways to love different. That's actually, that's a whole nother podcast.
Yeah, well, that's a whole other podcast. We'll get into it on another time. But we got our first question for the Broker Buzz this week. I've only ever worked for a very small brokerage or been the broker of the same small shop. Looking for input on those who have left their own shop and joined a larger brokerage, mainly looking to get off this island with opportunities for marketing, material, compliance, etc., that I'm not doing all on my own.
So we're seeing a lot more of this coming to reality. And look, as a broker owner, right, one of the biggest things is the compliance, all these extra tasks, the fees keep changing, the rules keep changing. And so it's just a matter of, all right, is there a way to take this off my plate? What's happening? So let me just start here. Number one, it doesn't just need to be large brokerages. There's actually a lot of brokerages of different sizes that offer potential flexibility to what you're looking for. So it sounds like you're already in the right direction by asking the question inside of our Facebook group. And my assumption is you got a lot of responses on there. And so for you, it's a matter of what are you looking to do? What do you really want off your plate? But don't just put that towards the large brokerages, right? Because there are so many different shops that small, medium, large that actually offer exactly what you're looking for. The structure is just relatively different, but you don't always have to just think large shop, large shop, large shop. So do your research, do your due diligence, and truly ask yourself what you don't want to do. Like, what do you actually hate? Write that down. Make sure you're clear and concise. Like when somebody asks, what don't you like? You can't just say, well, all the back end. That's just not a good answer. You need to be very specific so you can ask the right questions and make sure that you're talking to the right people that are aligned with what you want to do long term. So I encourage you to keep asking. We're seeing a lot more of this. AIME's working on a few things behind the scenes just to help answer some of these questions for y'all. But we also try to stay out of this completely when it comes to talk to this person, talk to that person, just from a conflict situation for us. However, I just want to make sure I say it's not just big shops that help with this. I have met a tremendous amount of people. Can't mention names because that's another conflict too.
Sure. Yeah.
We've met so many people in our community that do really unique things that are from small to massive that help with exactly what you're looking for. So you're in the right direction. Keep asking questions. Talk to vendors too. Vendors have a lot of insights that they can give you. There's going to be a bias, obviously, talking to another broker owner, which is completely fair. But just do your due diligence, ask a lot of questions, and you'll be pointed in the right direction. I can confidently say that.
Awesome. All right. And our second question, extenuating circumstances. I have a client who is a year out from a bankruptcy discharge 7. She was told she could buy if the circumstance was a job loss and go FHA. Everything I'm reading states medical and the death of a spouse. In this case, it was a job loss, which I thought was not an extenuating circumstance.
So for those that don't understand or don't know what this is saying, so for FHA, you basically can submit an exception and say this is an extenuating circumstance, which is why I ran into these problems. So FHA has guidance on what extenuating circumstances are. And generally speaking, a job loss is not one. So what this would allow you to do is a manual underwrite of the loan. So if the guidelines are asking for X amount of years to wait before a bankruptcy's or after a bankruptcy's discharge before you can start a loan, you're basically submitting an exception to say, I want to skip that line. Here's why I can skip that line. The only thing I will say, and I don't know if the guidance has changed on this, but there was a lot of opportunities during COVID. And we were able to leverage COVID as an extenuating circumstance because, well, it was real. It's a pandemic. So if that job loss potentially occurred because the Chapter 7 bankruptcy, it sounds like if it's been a year, it happened 2024. If there was any potential that it was tied to COVID, I still would absolutely file the exception. Granted, it's been a couple of years, but when that bankruptcy started, how it started, but they're going to ask, right? Like, did you look at jobs in the meantime? Were you able to find other opportunities? But losing a job is really difficult at this point to prove extenuating circumstances. But I mean, it's going to be tough. So I would also say if it's been a year, like, why are they a lot more stable now with their job? Are they making more money than they were? Is the payment on this new potential home higher than the other payment? This client might not be ready either to buy a home. And that's a real conversation I would have as a loan officer. That's a real conversation I do have as a loan officer with clients. And I make myself like when that opportunity does come up, I stay in front of them. But the fact that I'm really transparent up front, I challenge them with these questions. And I'll say things like, hey, one of the biggest things is we don't want you in this spot again. Is that a fair statement? Sometimes clients get upset, but I calm them down quick. I know you're upset. I know you're frustrated with what I'm saying, but here's the reality. You're asking for money. I want to help you. I do not want you in this spot. I take my career very seriously. So I want to ask you all the right questions to make sure we don't put ourselves in this spot. But also when that time does come and you are ready and the guidelines are met, I want to be your first choice. So that's how I do the conversations, especially if there's no opportunities. And when I really dive in, do they have assets? What's actually going on in that client's life?
Right. Absolutely. And our final question this week, 50-year mortgage note. What are your thoughts, John? I saw you put a post in Brokers Are Best, and I was just like, I want to hear from John a little bit more on this. And I know you said you're doing something else, so.
Yeah, I'm doing a video on it. So I got a lot of traction on there. Some people confused, some people get it. So, for me, I really believe this was put in from an investor standpoint, right? Investment property standpoint is directly where I thought this would be beneficial for investors when it comes to capitalizing on earning money because someone's paying the mortgage note. And a lot of these investors, right, there's write-offs that are involved. They're also able to, they're banking on appreciation. So if they're, buying in markets that are gaining value consistently, there's going to be opportunity as to why they would want to do it.
Right.
Now, when it comes to consumers, there needs to be tremendous guardrails because consumers now don't pay extra. Consumers now aren't paying extra on credit cards. They're just looking for the cheapest possible payment. And that does scare me, especially if you're buying in a market where it's not a booming market. And so, the first 10 years on a 50-year mortgage, I mean, you're paying peanuts. I think I did the math in the first 10 years on a $400,000.
It was like 16,000
in the first 10 years on a $400,000 loan at 6.25%. You're paying down $16,000 of principal. That's it. So you now owe $384,000 versus the $400,000 you bought 10 years prior. So think about it this way. I'm 34. At 44, I'd have paid down $16,000. When you put it into that kind of perspective, it's a bit scary. Now, that doesn't mean it doesn't open the door because there is some areas have affordability issues, and home ownership really does allow you to build equity and build wealth. So as long as the proper guardrails are put into place and you make it a little bit harder to get the product, you have specific requirements when it comes to the debt that you carry, the income that you make, the assets that you have, the reserves that you have. Yeah, I think there's potential opportunity on here. Now, people were saying, well, there's going to be higher rates, and generally that's how it works. So the lower the term of your mortgage, the less potential risk to the investor. So they're saying, okay, if you do a 15-year mortgage, that's less risk to me because you'll pay this off sooner. So we'll give you a little bit better of an interest rate. So generally, the further out you go in term, the higher the rate. And one of the potential things that I see happening is Fannie Mae, Freddie basically changing what's called prepayment speeds on the back end. And that's just watching how fast these loans are being paid off, and then changing the EPO policies, but passing it on to the lenders. So I believe the lenders will take the risk potentially here. And the lenders will say, okay, well, if it's paid off in, under 2 years, then we'll pay you back a premium on what you paid out in commission. So the investors are basically paying a premium to the lender. And in turn, the mortgage broker, us, is making that money from that premium from the lender. In turn, they might say, well, we want this to be more of a risk on the lender if they do pay it off because the investors want to make their money back. If they pay it off sooner than 2 years, right now it's 6 months, maybe they call it 2 years, extend that out. But I think there's going to be a lot more conversations about this. It does sound like this is something that is a real conversation to be had. So we'll get y'all more insight. I'll be touching base with Barry and a few other people that are close to this to see if there's a real traction here, but it does sound like that is the case.
Yeah, I mean, at the end of the day, correct me if I'm wrong, it's another option. And
correct.
And as loan officers, as mortgage brokers, you want the best for your consumer. And so even if it may not, it probably isn't the best for most consumers. And so, like you were saying, it's just as leaning towards the investor, not necessarily just like the homeowner. So it's still up to you to help guide them to the best decision to help that family grow.
Correct. And I mean, I think about it like DPA products right now. Right now, some of the down payment assistance products, if the client refinances or sells or does anything within 5 years, they have to pay it back. And if they wait 5 years, they don't. Like, that's where I see them putting something in play just to protect their investment. It protects the investor, it protects the lender, protects the broker even, and it protects the consumer. Like, they want to get in a home which just might make sense, right? To get in a home and then refinance into a 30-year fix later down the road. But this might be a path for many people. But again, those guardrails and not abusing this are a really big deal, because unfortunately in every industry there's bad apples, and that's what we just don't want to happen with this specific product. It can really hurt us.
Absolutely. Well, if you want your question read on the podcast, be sure to use #BrokerPowerUp when commenting in the Brokers Are Best Facebook group. If you are not in there, not an AIME member, scan the QR code, go to the link in this quick ad, and we'll be right back with sales pitch training and story time with John.
Thank you.
See you soon.
Are you a wholesale mortgage professional? Well, then the very first thing you need is a community to help you and your business grow. With AIME membership, your community is right here. Joining our community means never navigating the market alone or operating without a safety net ever again. We are 16,000 members strong of united wholesale professionals. From rookies to top-ranking originators, all dedicated to supporting each other's success so we can grow together. Beyond entry to the best community in the mortgage industry, AIME membership gives you the resources, tools, guidance, discounts, services, and support that help you and your wholesale business grow, thrive, and most importantly, close more loans. AIME membership connects you with leading wholesale lenders and vendors, offering you exclusive access, services, and discounts that save you more money while helping you make more money. Never get stuck on a loan again with our lender escalation program. Grow your network and skills with the wholesale industry's best conferences and networking events. Get the strategies and skills of top originators and industry innovators with AIME's cutting-edge wholesale mortgage education, resources, and content. AIME offers all of this and more, starting at a low price of $19.99 a month. You heard it here first. Couple cups of Starbucks coffee. For you to learn more and get started, all you have to do is visit aimegroup.com, AIME group.com /membership. Your community is waiting.
And I'm waiting to become a better salesperson. John, what do we got?
So today I am going to combine the story and the sales tip. All right. And we'll end it here. With the story and the sales tip. And there's a picture there, Tommy, in Rome that you'll share, and you'll know exactly when to share it. So sales professionals, your introduction matters no matter how awful your day has been. We start at zero. Things can go wrong. It's real estate. Murphy's Law is a real thing in real estate. What can go wrong will go wrong. And sometimes from a mind perspective, it's really hard to keep your mind on right, especially you have a deal, right, that you're anticipating to close and it falls out the day before. You have to call a real estate agent. You have to do all of these things, and it just takes such a toll on you. But then all of a sudden, after the day takes a toll on you, a realtor partner sends you an opportunity, you call the client, and the call starts flat. That really impacts the consumer and the experience you are giving. And I'm not saying that some days just don't absolutely suck, because they just do. I've been doing this for 13, 14 years now, and I'm very aware that things don't always go as planned, especially when it comes to sales. So I'm going to give you 3 tips for an introduction, and then I'm going to walk you through a wonderful story of why this is so important that just impacted me recently. So the first thing is lead with energy, not words. Okay? And look, mirror the client's energy, just be one step higher. If you're talking to an engineer, somebody that's in that specific field that's very analytical, you're not going to be jumping in. If they start, hey, how are you? My name's so-and-so. Here's my focus here. Oh, great. My name's Jonathon. No, read the room, read the audience, but you want to be just one level up when it comes to an energy perspective. And I tell myself that before I start my phone call. So step 1 is always say that. Have some kind of mantra, something that you do going into these calls. Mine is always that. One level higher in energy, one level higher in energy. And I say that because not everybody wants this energy that I have all the time. Some of you have seen it, right? It's really in your face. I can't help it. I've been that way since I was a kid. It's just who I am, but I've had to learn to peel that back, especially when I'm talking to certain clients, even certain loan officers, right? That aren't ready and used to that kind of communication. So it's my job to adapt to the client. It's not their job to adapt to me when it comes to the way that they communicate. That's my job. I have to adapt to them. So it's really important that I say that coming into any single call, no matter how bad the call might need to be. Number 2, reset before every single call. Do not carry your last file, your last conversation, your last frustration into it. Take a deep breath. Sit down, write down what you need to. If you need to dump some information, turn on your voice notes and just go nuts on your voice notes for a second. Have a process to make sure you don't go into that call thinking about whatever situation you had to deal with or prior. And the last thing is protect your excitement. Energy is your advantage. The longer you've been in the business, the more that energy continues to get drained from you. And I've talked to these loan officers. It's funny because at Fuse, you saw it. At Fuse, we had almost 40% first timers at Fuse. Yeah. And the energy was infectious. And some of those that have been in the space a really long time, I could see their excitement again. So many people came up and said, "This is my first time being at this event. I've been in the industry 20 years. Oh my goodness, you gave me such a refreshment back. Oh my gosh, I can't wait." You have to learn to protect your excitement, especially in this space. And look, when you first start, it just eats at you, right? Because you're all excited, you're green, you're ready to go. Hoorah, here we are. And then a deal falls apart and you're just in shambles. And you're like, I don't know if I could do this. I don't know if I could do this. Is this really for me? Is sales for me? Yes, it's not that sales is not for you. It's that we have to do a better job controlling our emotions because we are in an industry that is incredibly emotional when it comes to roller coasters. So those are the 3 ways that you need to do is lead with energy, not words, reset before every call, and protect your excitement. Those are the 3 things, in my opinion, that will give you a powerful introduction. And I want to walk you through why that's so important. So recently, I went to Niagara Falls. I had a wedding in Canada, and my uncle got married. So my wife and I, we went to Canada, and we ended up planning a couple of things. We had a day to ourselves prior to the wedding activities. And so my wife and I said, hey, there's this beautiful casino in Niagara Falls called Falls View Resort. There's 2 casinos in Niagara Falls on the Canadian side. Now, keep in mind, I've been going to Canada since I was a kid. I mean, I'm talking at birth, over the border at Niagara Falls. I mean, no less than 200 times in my life. So I'm not by any means a local, but I know certain areas and I just know certain environments, Niagara Falls being one of them because I've been so many times. So one of the casinos is called Casino Niagara. A lot of the locals go to Casino Niagara, and it's literally right there in front of the falls. And then the other one is the Falls View Casino and Resort. This is more for the tourist, but it's a nicer overall experience when it comes to the casino experience. But they're about 2.5 miles, 3 miles away from Casino Niagara. So the view of the falls is very different. Now, what I do know is there is a view of the falls from Falls View Casino Resort. Why do I know? I've been there a tremendous amount of times. Now, for some reason, I got lost inside the casino and I was trying to find this space. I knew it was near the cafeteria in the casino, but I couldn't find it. I want to take my wife there, right? This is just experiences I had growing up. It's a beautiful view. It was definitely cold, so I didn't think there'd be a lot of people. And there's this small little window where you can see a good view of the falls. And so I'm walking through and I'm like, all right, let me just go ask somebody. So I walk and I see a person that works for the casino right there. I walk up to the person and I say, how are you, sir? I'm here with my wife. I'm just looking for that spot where I can see the view of the Niagara Falls. And he looks at me confused. He looks like, we don't have a view of Niagara Falls. Now, internally, right, I may have had a beer. So internally, I'm like,
maybe.
What do you mean? You know, my eyes twitching. And at first I'm like, I know you do because I've been there. I've been there so many times. But anyway, I calmed down real quick, right? I said, all right, hold on. Let me just relax. So I know it's not the full view of the falls, I tell this guy, but I know there's like a side pocket. He goes, oh, well, yeah, there's like trees in your way, but you just go down there and you'll see it. It's down there to the cafeteria. Just take this all the way down. You'll take the escalator down, and then it'll take you outside. Thank you. So as we're walking, I now remember where I'm at. I say, okay, perfect. I take my wife down. I take her outside. And Tommy, you have the picture, so you'll share it in the edit here.
Yeah.
That's the view of the falls that you're looking at right now. That's the view. that he said wasn't a great view.
It's a pretty great view.
It's a beautiful view, Tommy, and there's nobody there. It's not packed. It's not packed, and I knew it wasn't packed. Again, I've visited so many times. So that introduction, it was late in the evening. He might have had a terrible day. And by no means am I faulting this man, right? He's doing his job. He's paid hourly. I get it. But he potentially, if I didn't know that was there, he could have taken away excitement for no reason at all. The way he introduced himself, the way he carried himself, the way he answered my question, his demeanor could have made my experience and my wife's experience slightly less. Now, it didn't ruin our experience. It wouldn't have ruined it, but it wouldn't have been as special. Now, imagine that introduction was different. Now, instead, I'm telling a story about how this guy dropped the ball, where the story could have been about how his excitement is what made my wife excited. Imagine he would have said something like, oh my goodness. Yes, so it's definitely a different view because it's not of the falls. However, I love it because there's not many people that go there, so you'll have it all to yourself. And it's so beautiful. Our fountain is right out back. There will be trees in the way, but if you go into this little nook in this area over here, you'll get a great shot of the falls. That would have been such a different experience from an introduction standpoint.
Oh, absolutely.
And that all had to do with his introduction. That all had to do with the way he greeted me. And he could have had a bad day. He could have. I get it. But now I'm here. What are you going to do when your client shows up? What experience are they getting? Are you showcasing the beauty of what you do and the excitement of what you do? Or are you making them second guess about getting a mortgage? And that, my friends, is the challenge to all of you. Every word matters. Your introduction matters most. How good is yours? How good is yours? Because I bet you many of us don't even have a script, don't even have a play. That's my story and my sales tip for the day, my friends.
Love it. Love it. And I do have to compliment you on that energy level. You definitely do practice that. And I see it whenever we hop on this podcast. It's usually pretty early in the morning. And I need that little lift, and you provide that lift. And it just, so practice what you preach, and you definitely do.
You're the man.
And
next time.
Thank you. Thank you. And thank you for tuning into this week's episode of the Broker Power Up podcast. If you found today's tips helpful, do us a favor. Hit the like button to let you know you enjoyed it, which helps even more people see this content. Subscribe to our YouTube channel. Ring the bell to get notified every time we drop new content. Share this video with a fellow broker who could use a power up. And remember to lead by example, to lift each other up, to grow together, and most importantly, close more loans. Until next time, keep powering up.